All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. It's been a dry spell for triggers here since the 12th. We got a bunch of them. Some had some good follow through, others didn't. But since then, it's been Bank of America and nada. Very, very dry. And today is that same way. It's very dry, no new signals. We have some crossover action going on out there, and most of it to the downside. So if we take a look at things like, well, here, let me pull it up. Chipotle Mexican Grill, for example, has a downside 3-7 crossover coming in, but this is not a bearish signal, in the way that it's forming. It's just more of a consolidation, not, hey, brand new trend coming. So we have a lot of that out there. This morning, I thought Microsoft had a good chance of triggering here this afternoon. It is not a trigger. Consolidation risk is just too high there for it. So, not able to go out and trade Microsoft right here. So no new triggers on the board. We could see some come in here. Halliburton I thought might have a chance, but it has moved more than two average true ranges to get to this level, so it disqualifies it. And that was put in, that kind of element was put into the algorithm very early in the algorithm testing stages, as we knew that, the whipsaw chance on those is very high, and it's played out that way. When they run beautifully, but when they don't, it's a huge loss and not something worth going after for the challenge. So nothing new there for the 100K challenge. Now, we do have Bank of America on the board. And Bank of America option value right now is 95. So this is one where we're in that kind of similar position to Target, that we were for Target, where yes, the option is down, but the price of the stock is pretty much where it was when we entered. And this is more of a product of buying it on a earnings day, right? 10% drop in the option value, and it was one of the reasons why even when I made it, I didn't buy more contracts because just a little worried about paying up too much for them. With it being right there, I'm going to hold it. It's not changing anything too dramatically here. If it were on its hard exit, its auto exit date, the 24th, I would have to leave it. But, with it just kind of in this kind of gray area, I am going to hold it and into tomorrow. If we had two or three signals on the board to go get into, I probably wouldn't. But, when we look at the odds and look at the probabilities here, we're not talking about dramatically different probabilities here when the stock price is right pretty much where we entered. So going to go ahead and hold on to Bank of America here into the close for the challenge. All right. So anyway, that's challenge. Not a whole lot here to do on it here today, and moving on. Okay. Now earnings season. We've had 16% of the S&P come out and report earnings so far, and we're starting to get some of the data. Once we get between 15 and 20%, historically, we don't see a big change in the aggregate numbers going forward, meaning the trends that we see in that first 15 to 20% are the same trends that we see after 80%. Right? They change slightly, but we can get a good picture of what earnings season is looking like. Okay, and here we go. To date, 16% of the companies in the S&P 500 have reported results. Okay, great. In terms of earnings, the percentage of companies reporting actual earnings per share above estimates is 79%, which is above the 5-year average. In aggregate, companies are reporting earnings that are 7% above estimates, which is also above the 5-year average. Okay, great. Earnings, fine, whatever. What about sales? In terms of sales, the percentage of companies, 62%, reporting sales above estimate is above the 5-year average. In aggregate, companies are reporting sales that are 0.9% above estimates, which is also above the 5-year average, right? So sales are beating, right? They're beating estimates. Earnings are beating estimates, but earnings are beating estimates significantly more than sales, right? And that's not anything too uncommon. That's what we have seen, historically. They start breaking things down into sectors. Now, while I said 18% of the S&P is enough to kind of look at that group, to break this down by sector doesn't make a whole lot of sense. We haven't seen enough in most of the sectors outside of financials, that have reported. So some sectors have only had one or two companies report. So it doesn't make a whole lot of sense there. But the revenue growth rate for the second quarter is 3.8%. Which is pretty good, and so we're looking at, we are still looking at revenue growth, coming into the market, but it will be the lowest revenue growth that we saw since kind of the revenue recession. Right, we saw a revenue recession in early 2016, and then we came out of that in end of 2016, and so this will be the lowest revenue growth there. But what's it basically telling us or showing us? It's basically saying, hey, the economy is still growing, but growing at a slower pace. And have we seen that before? Have we heard that before? Have we seen other data confirm that? Absolutely. And on aggregate, that's what we are seeing in earnings here so far. I do find this interesting. The forward 12-month PE ratio is 17, right, which is above the 5-year average and above the 10-year average. But it's also below where it's been for a while. That's partly because some of the earnings have come in and have been a little bit better than expected. But anyway, that's some of the early look there at earnings. Obviously, a lot more to come. I talked about Halliburton this morning, and what's kind of what we're seeing there, and my expectations when it comes to that. Okay. AT&T was asked a question. Jeff, is the move in AT&T lower today because of the game-changing news event, CBS squabble, or is this possibly an opportunity to add AT&T off of the lower band? For me, this is a breakout return, right? It's a breakout return. It's not a place I would be adding, though. Right. Yes, ultimately, could you add? Sure. But you have earnings coming, right? So you have to kind of look at it and say, all right, that is something that has to be taken into account. And do you want greater exposure ahead of earnings? When it comes to a squabble with CBS, I don't really care about it, very much. Those types of things, they create short-term ups and downs. They don't really affect things long term historically. Now every time is a little bit different, but I wouldn't mind adding right here if I didn't have a position or I felt underexposed when it comes to AT&T. Would have no problem adding right here. But if you're looking to, if you're feeling like, hey, the exposure's enough, this is not the place where I go, oh, okay, it's finally had a pullback and go. I don't see really any bottoming, element here with it, and something I would not be surprised to see trade down in the 31.25, 31 area as a little bit of overreaction to the to the news that is out there here today. But I'm no expert on that news and how that is all playing out and everything. That's not something that I'm very keen on here. But they do have earnings on the 24th? Yeah, so Wednesday before the market opens. But we're still trading, AT&T still trading at a 9 forward PE. Still trading at book value of $25 with a over 6% dividend. Yep, I know they have problems, but it is at a spot where anywhere in between 28 and 32, I can't argue against anybody buying it, as long as they're looking long term. If you're looking at where's it going to go tomorrow, then hey, that's a totally different story. But anyway, that's my 2 cents here when it comes to AT&T and what we're seeing with that. Okay. Alrighty, so anyway, we will have some earnings after the bell here today. Let me pull it up and show you. If you want an earnings calendar, there are a million out there. One of my favorite is just here on Estimize. It's free and everything, but we have Whirlpool, which is on the watch list. They report after the bell here today. STLD reports after the bell. I'm very interested in that. We talked about steel a little bit last week, but then we get into tomorrow morning, and we have, we're Coca-Cola in the morning, which is on the watch list. We have UTX, which is not on the watch list there, just because of option values. But Chipotle after the bell tomorrow, that's on the watch list. Visa, a lot of stocks on the watch list are going to be reporting earnings this week. And as they do, I'll talk about them because I will be looking at the earnings of the stocks that are on the watch list to say, hey, is this doing anything that's game changing that would ultimately affect it going forward from trading with the algorithm? For the most part, the answer is absolutely no. But occasionally we do get something, a little crazy that does happen that we need to kind of put it on the back burner here for a while there with it. But I don't expect that we'll see that with Chipotle or Visa. We haven't seen it with Howe. We haven't seen it with Micron or any of the others. But earnings are just a thing that companies have to go through. Some companies have to pass through. I'm sure the same geopolitical news will be around tonight and the whole Fed talk and everything else. And, we will be getting into, some of the end of month type economic data here this week. Middle month, end of month. But let me pull it up here for you. Just here in the U.S., you can see here on the week, not a ton. Not a ton on here, but retail inventories, okay. Retail getting hit here today. PMI composite flash data, which I'm always interested, comes in around, will be coming in from around the world here this week. But anyway, that's what we will see here this week, and I believe that sets the market up for the Fed here the week after. Yeah, the 31st of July, we'll have the Fed meeting, press conference and all of that ahead of some of the beginning of the month data that we will get for August. Okay. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you tomorrow morning. Take care.